You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined with K-State grain economist Dan O'Brien. Dan, thanks for joining us.
Thank you, Shelby.
Dan, kicking off the grain market conversation with what are futures looking like?
Well, if we're looking at wheat, not very good. We've been trending down and have seemed to be unable to see much positive in any news that comes along. Of course, this is happening right during seeding time, so we might have the opportunity to speak about that later. We did see on the corn futures and so corn futures yesterday, they were up about 4 to 5 cents. With Dees corn closing at 488.5, and it's interesting to compare that to next year's Dees corn number at 507. So somewhere in there, that the market is probably thinking that between the United States, Brazil, Argentina, that the high soybean price is probably going to attract enough acres that will soften up or will have a positive effect on the corn market. For soybean prices, again, basically going sideways. Still a price it's given all that's been going on, still pretty healthy. November soybeans closed at $13 and a half cent. Yesterday down 2 cents, which is just kind of the noise of the market on a daily basis. Compared to the coming year, you're looking at 1269 for November 24 beans. So again, just the opposite situation of corn and of the corn current harvest and next year's harvest contract. So I think that you got an indication of the psychology of the market in terms of where they think things will be going over the next 12 months. And as we talked about for wheat, 685 was the close. That was down 9 cents, and we've been on a pretty much a moderate downward trend for a while in the wheat markets.
And what about cash markets?
Cash markets still, we have basis bids off of those futures prices. We're about ready to come into October. We're not rolling off. We're not rolling into into any new contracts yet. That won't happen for corn until we get to Dees 1 or thereabouts. For soybeans, November 1, or for wheat. But so that source of volatility is out of the way. But interesting to look at, to me anyway, where we still see basis strength at. So strongest cash corn bid. There's one bid that stands out by several cents in the Garden City region at 519 to positive 31-cent basis. Next best is Hutchinson at 10 over at 498. Hutchinson area, Colby area, even money at 488, and others 468, 483, something like that. New crop bids, again, you do have that the strength of that Garden City area with a 514 new crop bid, 26 over. All the other bids are either even money. Well, basically they're pretty close to even money in Hutchinson, Salina, Colby. More weakness shown in the eastern part of the state in Topeka and Columbus. And as you and I have been talking about for a while now, the grain sorghum bids have been coming off pretty strong. Salina as the new crop corn bid of 483, new crop grain sorghum bid of 518. So that's showing strength of exports likely on the sorghum side, and Hutchinson stands out even more. Again, right in the central part of the state, right where we're shipping. If we're going to accumulate grain sorghum and ship it out, it's mostly going to happen there. A bid of 50 over for harvest for in the Hutchinson area was the top bid. Not all elevators are there, but one or two. So when you have that, somebody's probably they've got an order. They're trying to fill some trains, one or two trains or something like that. And so you have right now the leading bid in the feed grain sector in Kansas seems to be, at least that we for what we're watching, in that Hutchinson area at 50 over, and that really stands out. And across the state. Soybean bids really around a low of 1225 out in the west, a high of 1301 in the Hutchinson area. Again, Topeka not far behind. And for wheat, as we talked about, Again, just a lots of variability. We have seen in the western third of the state the basis bids for wheat really start to decline, and I. Uh, it's just more information that farmers are going to take into account when they pull their tractors out, or they pull their drills out into the fields and plant wheat or not. So I think where we have had moisture, no doubt they're planting off into a situation that likely give them a stand and they'll go forward. And so I guess as we really see the major thrust of wheat seeding happen once we get into October, and it seems that we're well underway for that, and we'll see where all that goes this year.
And Dan, kind of taking even a deeper dive into that wheat market, a lot of things are happening. While it might not be the focus, a lot of things are happening worldwide.
Yes, at least by my take, Shelby, it seems that we have a whole bunch of things that would normally be viewed as very optimistic for wheat prices, particularly the world wheat ending stocks to use at a 16-year low for wheat, showing, and that's a world less China perspective, and China doesn't export almost any wheat at all. They're an importer. And there are questions about how much there actually is there in China, but still, 16-year low for that, and since 2017 we've been actually declining in terms of the quantity of stocks. Normally we'd be in a situation where we think, well, gosh, supply demand fundamentals would be supporting pretty strong wheat prices, but here in the U.S. with our strong dollar, with wheat flowing out of Ukraine, of Russia, and again, wheat from Europe competing with us here in the States coming into the country. We used to have a lot of pessimism right now in terms of the market. Um, so I I told an audience in our ag lenders meetings that we had this last week it's pretty difficult to sit across the desk and come to a working arrangement with your borrowers and have basically to see prices falling off as they are, yet to have this information in your hand that, gracious, in the long run we're on the verge of some real volatility, very likely that could really drive prices higher, but we just haven't seen it of late. So so it's a difficult situation. Luckily, when we do put wheat in, we're not borrowing lots of money near as much as we are for other crops. So it's easier to get that crop in, get it up, and then see where you stand in the spring. And that's probably what a good number of people will do.
And another report, in a report that's recently coming out, a report that the USDA will be putting out soon related to the grain market. What are a few of those?
Yes. Here at 11 o'clock today, after our program is done with KSU, the USDA will be releasing its September grain stocks and small grains reports. And also kind of tied in with this, it's very likely with those stocks reports, they'll be able to do a back cast on what the actual size was of crops last year. So for corn and soybean people, they'll be pretty, there'll be a lot of interest in that. Again, if it turns out that the USDA perhaps has overestimated the size of those crops from last year, well, then that comes back into the next set of supply demand balance sheets that we hope come out in October. Given the government shutdown, that may be in question. But whenever the USDA does release its next set of reports, if it comes out that the size of that crop was overestimated, then by some degree, well, then you're taking down beginning stocks, you're tightening up projected stocks on down the road. So that's one thing that we'll be watching. And expectations are that the USDA did overestimate the size of the crops in 2022 a little bit for corn and beans. So soybeans, that is, stocks numbers generally not lots of changes thought to uh, thought to be on the docket for that, but uh, I guess for me, I'm watching the quarterly stocks numbers the closest at this time, because it just has such a strong effect on all the balance sheets and all. And if the stocks numbers are way off base, then the USDA has to go back in and fiddle on the usage or the supplies to go try to rectify all this stuff to try to reconcile it. And that's when eventually things can come about. I should mention something. We touched uh, on the potential for a government shutdown, and we've been talking. We at K-State and others have been talking with USDA of late on programs coming up, and you know, a, um, a delay of 2 or 3 or 4 days, not much. But one thing that is happening, if they do get a government shutdown, then you're really affecting the National Ag Stats Service, who sends people out into the fields right around the first, which is when the shutdown would be happening, and to get enumerated field level surveys. Well, if they can't get that, then you're going to hurt the veracity, or, the accuracy of that October crop report, and you just have an accordion effect. And if something like that drags on for 1 or 2 or 3 weeks, very possible we may just not have an October set of USDA reports, either the crop production or the WASDE reports. That's not the end of the world. The market would still be out there functioning, but we just wouldn't have the hard data from USDA to work with. So we'll see if that happens. Hope it doesn't, for the sake of the ag markets. But if it does, we'll go on and we'll just pay attention to everything except the government numbers, because they probably won't be there.
And Dan, so what would you tell our crop producers to kind of keep an eye on as they look forward?
Well, when we do get hard numbers, I think the biggest issues will be what the U.S. yields are for corn and for soybeans, front and center. And I, I think that it's very likely that the corn number could either be unchanged or lower. I'd be really surprised if it's higher. I think there's a lot of risk, sizable risk, that the soybean yield and production number could be tangibly, significantly lowered, and in that balance sheet, there's not a lot of room for that to happen. We're already just about any move lower, we're going to start rationing usage pretty hard, and we just don't have a lot of room to do that. So a lot of potential for soybeans to respond higher out of that, and corn. Uh, we have such large acres that there'd be a response if we reduce corn yields, or if we reduce corn supplies, but we really don't get below 2 billion bushels until we we get to about 170, 171 bushels an acre, and we're at 173.5 now. So anyway, that's kind of my view of where things could end up going. Really more I wouldn't say worried, but more focused on what soybeans could do. And the last thing that could come about is, we do see fuel prices moving to the higher side. And one surprise that could come in on the corn market is if we get a real supply shock on oil and gasoline's not available, the government could come in and enforce mandate from E10 to E15 or something like that. So that would affect the ethanol industry, and just draw that much more corn in. If that happens, that would have well, it very likely to have a positive impact on corn prices, but I don't want to speculate too far out ahead, but that is something that could occur.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.